All right. What's up, everybody? How's everyone doing? How you doing, DC? How's your evening been so far? What's up, Andrew? Yeah, it's been no complaints here. No complaints. Life is beautiful. Who wants to kick things off here this afternoon? Hey, fire away. Just dining out of the coal mines to speak. Hopefully, you're not a canary in there, Andrew. Do have myself a cocktail here this afternoon, so who knows how crazy today is going to get? So fire away. All right. So, first question: how do you choose your levels from the high and low of the current day? So, twofold, or choose get my levels done in two ways. So, first way is just done by the indicator, right? So, the red line here on the indicator gives me an automated level each morning as a profit target. It's effectively 2x whatever the size of this blue box is, right? So, this blue box here today 104 points. So my target away is 208 points, right? On the daily time frame, when we're picking these levels, I'm just looking to the candles to my left and then rounding them up to the nearest round number, right? So this morning we were at we were going like 28,900, right? Was kind of our target. And so I'm just taking the nearest high or nearest low on the daily time frame. And then if it's more than 100 points away, I'm just filling it in every 100 points. Basically, just really simple. Like I'm a believer that price action kind of stops in zones, not necessarily at a specific price. And then when things stop in zones or behave in zones, it moves to the number with zeros, basically. And so I just round it to the nearest zero. No, I mean, honestly, the actual picking the levels, it's a little bit overrated, or at least from my perspective, because all I'm looking for here is just a simple, repeatable process that if I exceed this 2R level, right, this red line, that I have something that I can work towards, right? So if I break out through 29,000, okay, I know my next one's 29.1, and it just gives me a reasonable risk reward that I can fill out that isn't going to be like 1,000 points away. And like most of the time, right, we're not really trading past that 2R level anyway, or that red line. So honestly, sometimes it's just for show. What else we got? Yeah, spot on. Just a guide. One of my favorite sayings, Andrew, is markets are going to behave like they always have until proven otherwise. So, you kind of have like three market states. You've got trending markets higher, trending markets lower, and then non-trending price action. And so, you kind of just get these periods where the market has a little bit of a different personality or different bout of volatility, or whatever it might be. And so that's just a part of the game. Um, every now and then, right, we'll have periods where we'll get stopped out more often, other times where our first trade of the day will be more successful. And that's just variance, right? So variance kind of plays its ugly little head here and kind of creates a bit of a random distribution. The challenging thing about trading is that you're effectively solving for like 70%, right? No matter what you do, no matter what technique you have, there's nothing that's going to be perfect and that's going to account for every possible scenario that exists. So you're just trying to solve for, hey, okay, what's going to work after 100 trades, 1,000 trades, 10,000 trades, right? Whatever the number might be. And that's really all we're looking for. So every now and then, short term, you get a lot of variance in between those results, and that can be a little bit uncomfortable at times. But that's really all that it is. And so, the things that haven't really changed for us from like a trading perspective are our risk management, right? And our rules about exiting positions as P&L is increasing. We focus on those two variables and we kind of keep those two things sharp, and it kind of smooths out that variance curve. Yeah, I mean, no one bats 100, right? It just doesn't exist. So we just focus on what we can control, and that's usually our risk sizing, our risk management, right? So our position sizing, our stop loss location. Do we buy on the pullback or do we chase, right? Like these are all the things that we can control. And effectively, by being deliberate and consistent with our process, we're trying to basically expand our surface area where we can get lucky. Where if you do, random things and you kind of have a different process each time, you might get lucky on an individual trade, which is, fun to optimize for, but getting lucky on an individual trade isn't significantly profitable, or at least not profitable over the long term. So we're trying to create scenarios where if we do get lucky over 1,000 trades, right, we're going to get paid more often than not. And then luck within that context, right, it means basically outperforming whatever the base expectation is. What else we got here this afternoon, team? Ooh. So on my everyday trading journaling or trade journaling, I do the following. One, I now record how I feel first thing before anything. Two, my strategy for what I want to achieve during my trading to improve my trading, what behaviors I want to correct, and then the number of details about the trade I like, entry, etc., how I felt during and after the trade. And then number 5, one thing I did wrong, one thing I did right, one thing I can improve, and then one thing I can focus on for tomorrow. Is there anything you'd have me add to this? So good question. My first instinct to that, right, would be just adding like what the baseline behavior you expect from yourself throughout the trading day, right? So I think that the biggest thing to optimize for in trading is remaining in control. If I can remain in control over my decisions, my outcome, or my psychology, right, my emotions, then I make it much easier for me to basically be in control over my outcome. So I would try to define what that looks like to you and then compare your end of day of did you match that expectation or did you diverge away from it? But besides that, I think that that's a really good list. Because generally, right, when things go wrong in our trading, it's very rarely that it's like, oh, I got stopped out and that was the stop loss that blew my account. It's more, I got stopped out or something happened and I lost control over my process and then I blew my account, right? So that would be the baseline to optimize for. And what you're saying, right, is spot on, right? Journaling will help you greatly because it helps you formalize your ideas better. And once you see that pattern on your piece of paper, it's much easier to be able to visualize how you can avoid making mistakes in the future and like what the alternative path to that bad decision is. Yeah, that's it, right? And I've talked about this in the past, and I'm sure you're experiencing it now as well. But trading is just self improvement gamified, right? And your journal is basically your non P&L scoreboard over how much you're improving. So, are there any indications that a setup is going to be a breakout versus a pullback for an entry? Do we just wait to see what happens prior to entry to prevent stop outs? So for me, I'm pretty much always entering on the pullback right now. I haven't entered like or I haven't chased a breakout and at least not on purpose for like a year plus. Um, your data is going to tell you basically what the answer to that question is, Lorenz. So, if you're journaling your trades and you look at your entries and you constantly are keep getting faked out because you're chasing the breakout, maybe waiting for the pullback and buying your stop loss will help you avoid basically getting faked out, right? So, this is kind of where journaling and being consistent with your decisions is going to show you what pattern actually solves your problem. The other thing to add there, though, right, is no matter what technique you use or how hard you try or however much you optimize or what other indicators you add to your screen, you're never going to be able to avoid getting faked out. It's just going to happen. It's just a part of the game. So the question is, how do I get 70% of the entries that I want in the direction that I want? And okay, that's it, right? That's all I really care about. So for me, I always wait at the moment. Always wait for the fake out. And it's been like that since, I don't know, middle of August of last year. And it's proven to be an effective tool for me. And it was just because when I was doing the quote unquote aggressive entry technique and buying the breakout, I just found myself getting faked out far too often. And I would be correct on the direction, but wrong on my timing. And I was just getting really frustrated with it. But because I was doing the same thing every single time on my trades, it was easy for me to adjust my technique because the pattern of what wasn't working was obvious. Like basically, I want to see the other side of my trade fail before going long, right? So I want to see bears fail before being bullish. I want to see bulls fail before being bearish. Any other questions here, team? What else we got? You need to journal more, right? Not just take more trades. Your job as a trader isn't to trade, it's to study your data and to learn from your mistakes. Just exactly what I described, DC, right? I was getting faked out too often on those ideas. So I switched to using the fake out entry technique in about August of last year. And since switching to that, right, I just do the same thing every single time. So it's now at the point, right, where if it's not broken, don't fix it. Someone mentioned, right, there's different personalities or different, kind of market states that can happen. So maybe at some point, right, we'll get back to a market where everything is squeezing and fake outs just aren't happening. And at that point, okay, my journal will tell me I'm missing too many trades. I'm not getting the entries that I want. And I'll have an opportunity to adjust my stop loss / entry technique. But for now, no need to change anything. It's working fine. Well, I would have just had to have guessed, right, Andrew? So, like I probably would have been able to get there eventually, but it would have taken me a lot longer, right? So I would have had to try 2 or 3 or 4 things. The biggest thing that made the change easy was the consistency in my technique prior to making the change, right? So I wasn't trying to change 10 variables. I knew I only had to change one. And because I knew I only had to change one, because I was getting the direction consistently right, it was obvious what I needed to change. So, that's why I talk about systematic trading being so valuable. It's because it speeds up your learning curve. If you're not, doing a random thing each time, the patterns that are making you money and costing you money become very obvious. And then you kind of have to be a fool to not change things or keep things going when you have that obvious evidence. And the interesting thing I found with a lot of traders, myself included, is that when they don't have like facts about their trading, their perception or their feelings over what's working and what isn't working is generally wrong. They think it's, their strategy or their position sizing or their risk management or their psychology or whatever it might be, when it's actually X or Y or Z, right? So dealing in facts, not feelings, makes it a lot easier to be objective when you're evaluating yourself. And that in and itself becomes a very, very powerful tool. What are the questions we have here, team? What else is on people's minds? Well, what do you mean by level out, Shirley? What does that mean to you? It has, but we've traded it very well. So it's like, I don't know. I don't particularly want things to change when I get good volatility and good opportunities for entries. Um, what happens during the futures roll, though, right, is that you basically just get a lot of false signals for momentum based trading, right? So if we're relying on volume as our confirmation standard, you're going to see a lot of big volume bars that effectively are meaningless because there's a lot of forced buying or a lot of forced selling. So the reason that we don't trade during the roll, or the reason why I'm taking this roll off, is because the spread is massive between the June contract and the September contract, which means that there's going to be a tremendous amount of forced buying and forced selling. And it just creates a headache, right? So when you pair that with a volatile market, and then you pair that with an opportunity to get a lot of false signals, it's not an environment that is particularly conducive to being successful in. And so it's better to just go bask in the sun and enjoy the early summer than it is to force anything or do anything stupid. But we've been in a volatile market all year. So, markets will behave like they always have until proven otherwise. Who knows when that proven otherwise will show up? Yeah, I mean, like I said, right? You just get a lot of forced buying and selling. We didn't really see too much of that today. You saw a little bit of it in the afternoon, right? Like, these mega candles and these huge volume bars. Maybe not the one at the close, but yeah, that's where it becomes a bit of an issue. Sounds good, Andrew. Enjoy the rest of your evening. Keep working hard, man. You won't have that day job for too much longer. But yeah, tomorrow will be a really heavy roll day. Monday will be a really heavy roll day. And then officially Tuesday, right? You'll be back to the forward contract, which would be just like NQ1 always is. You get lots of forced buying and selling, right? Because you have to close your position if you want to maintain it, and you have to buy it in the next contract. All right. So heavy just means lots of volume in that context. So you're rolling your position from the June contract to the September, right? Because futures contracts are cash settled. So if you hold your position through the contract expiring, it settles as cash in your account. At least NQ does. Sometimes it can be physical if you're trading a commodity. So if you don't want that to happen and you want to maintain your thesis, you sell your June and you buy your September, right? Or you sell your June if you're short, or you buy to close and then sell to open the September. Well, price can still go up in the roll environment, right? Markets are still going to have their own ranges and their own movements. But when you have so much forced buying and selling, it makes organic or obvious price discovery very challenging because it's a lot of false volume signals. Yeah, price went up, but it didn't go up that much, not relative to the last couple days. Oh, don't overthink it. And if you're still struggling with it, search up what the futures role is on Investopedia or watch a couple YouTube videos and get familiar with it. We have 8 days a year where this is effectively the type of price action you'll see, right? The forced buying and selling. So it's better to just sit those days out. Three drinks, no. I'm about a fifth of the way through drink number one. Three drinks in 27 minutes would be something. Good Lord. These literally my words, right? Like I would be incoherent if that was the case. I don't drink too much. What are the questions we have here this afternoon, team? Anything else on people's minds? Well, I appreciate you joining, DC. We got 15 people in here, so let's get a few more. No, not yet. Again, some people that are getting closer though. And I think I've answered this in the past for you, Shirley. My guess is probably the first person goes live around September-ish. That would be my guess. The actual amount of people using the prop firm is probably less than you think. I don't trade in the afternoons. If I did, I would stream it. So I don't. I mean, I would prefer to trade in the afternoons than doing calls or answering tech support tickets or doing things along those lines. But I have no evidence that I trade well at that point, so I don't do it. We have about 150-ish people, about 500 total accounts. Yeah, everything I stream is all that I trade. The only exception to that, right, would be like my long-term portfolio when I do my like monthly ads or quarterly ads or on dips. So those are like long-term positions that I'm not selling for 20 years. Yeah, correct. I only trade momentum concepts as visualized by the opening range breakout. Don't know. I've never back tested it or traded it in the Asian session, so I wouldn't be able to answer that question for you. My zone of excellence, or where I'm an expert at, is trading the US Open. That's what I've spent my career becoming great at. I pretty much ignore everything else. So it wouldn't be very fair for me to comment or to guess. Like, I'm a believer that the specialist gets paid, right? The heart surgeon makes more than the general practitioner. So I would much rather be a heart surgeon than a GP. There's a great tool called Edgeful. If you want to do like a general back test of various ideas, that will give you a rough idea of, does this work in Asia? Does this work in Europe? Does this work in the US? I trade pretty much just one ticker, NQ. I look at about a dozen or so names though. You want to go pee? Feel better? What's up, Michael? Good to see you again. Got any questions for us, Michael? For me, it's about the first 90 minutes of the day, Frank. So about 11 Eastern. I mean, the low vol fake out, or I'd probably call it the low vol pullback, right? It would be something like, it's a good example here. So something like this, right? You get separation away to your 2R level. Price action moves back towards the low or the high of the opening range. And then effectively you get a breakout back towards the opening range. I haven't traded a low vol pullback in years. just haven't found the use for it. Is there anyone here who isn't a DTR member? We have any civilians among us here today? I'm a nicotine guy more than a cigar guy. You know, I can't really answer that question super well with to you. Does trading get less stressful when you get over the hump of worrying about income, like trading to pay the bills? For me, trading has never, like, from a big picture perspective, ever really felt stressful. Um, so I don't know if I would phrase it that way. What I would maybe phrase it as is that the pressure to perform never really goes away, right? So initially, when you're trading, you feel pressure to make money to cover your lifestyle or, pay your mortgage or whatever it might be. And then as you improve in your career and you start to trade bigger sizing, the pressure of that sizing creates its own alternative set of problems. So I don't like the idea that you ever get to the finish line in trading where things like magically start to feel better and they don't impact you and don't stress you out or don't cause any of like those headaches or whatever you want to call it. You just end up changing your problems that you're dealing with, right? So you go from, okay, I got to worry about can I buy hot dogs this week to, oh my gosh, like I gotta, yeah, I don't know. I got to pay a bigger mortgage than I was expecting, or whatever it might be, right? So, I don't think that pressure ever goes away. Um, but for myself personally, I've not, in the grand scheme of things, ever considered trading stressful. And I think a lot of that is because the term stressful is kind of a generic term. It means a lot, but it doesn't mean a lot. It's like a girl calling you nice. Like, okay, like I don't know what to do with that. So I think it's a really easy word to use to describe something that we might not actually be feeling. And so for me, trading has never felt stressful. There's been times where I've been stressed out, no doubt about it, where I'm more anxious or I'm more agitated, or I'm whatever. But those adjectives are much more specific than ever being stressed. Any other questions here, team? What else we got? Yeah, there's been a nice spread of questions here. A lot of different topics covered. It's been nice. No, I would disagree with that, right? In the sense of heart racing mid trade, that probably never goes away completely. But I was more so thinking from the perspective of someone that wants to become a full time trader, but is not quite there yet. If your heart is racing in the middle of a trade, your sizing is too big. So you are creating problems for yourself that don't need to exist. So I would size down, right? Feeling that way is a decision, and it's a decision driven by your position sizing. You have to earn the right to trade larger, and most people overestimate their ability to stomach risk. How long have I been using my current strategy, and how has its performance how has the performance varied? So the actual ORB setup or the ORB technique, I've probably been trading for about 2.5 years at this point. Yeah, about 2.5 years, I would say. The exact way that I'm trading now, about a year. So like position sizing, right? Really entry rules that I have, like max risk per trade, like all those things, about a year. But for me, like the stuff that is a constant is my ideas about risk management and my ideas about momentum. So I've been trading candlesticks and volume now for 14 years. That's how I was taught to trade when I was working institutionally. When I was doing trade execution, we would use big volume bars to basically hide our orders and our entries. And so that's a concept that I continue to use to this day, not in the same way that I used it there, because I'm not trying to hide my entries. More so that I know that institutions are buying when there's big volume because they can get the fills that they want. So those concepts have remained relatively constant. I used to trade like high of day breakout, low of day breakout, and like Bollinger Bands. That was probably my Bollinger Bands were the first thing I learned how to trade. But that was probably the longest I've spent on anything. And Bollinger Bands, the mean reversion setups that I would do with them worked really well in equities because you would get big gap ups and big gap downs, which would create those mean reversion opportunities. So when I was trading options or I was trading just like pure stocks, the Bollinger Bands were great. When I transitioned to trading futures, which are a more efficient day trading mechanism, the Bollinger Bands just started giving me far fewer setups. But the ORB is effectively the same concept as a Bollinger Band, except it's a bit more static, right? So, I still have my Bollinger Bands here. The midline here, the blue box of the ORB is effectively a compressed Bollinger Band, right? And then your targets, right, are an expansion of them, which is the red line visualized. So it's a very, very similar concept to what I was doing in the past. But the ORB just gives me more daily setup triggers trading futures. And so that's why it's the priority. As for variance, all things considered, the strategy itself is not what dictates how much drawdown I experience or, what my streaks are. I haven't had more than 2 losing days in a row in 18 months. So there's not a tremendous amount of drawdown, but that's not because I have the holy grail of techniques or the holy grail of strategies. it's because my average win is like 3.5 times bigger than my average loss. My size that I'm willing to take risk wise on NQ is 10 points. So if I'm wrong, I'm losing about 10 points, often less because I'm trying to buy a discount relative to that. And then all I need, is a 20 point, 30 point, 40 point win to now pay for 4, 5, 6, 10 losses, right? However many it might be. So it's creating asymmetric upside by being a good loser that allows me to maintain a reasonable, steady equity curve without dealing with extremely tenuous or long drawdown periods. So for me, the part that a lot of people don't understand about trading is the math required behind it. So if I'm flipping a coin, which effectively I am, right? Either my next trade's going to be a win or a loss. If I'm flipping a coin, but I make $3 when I land on tails and lose $1 when I land on heads, I'll flip that coin a lot and I can be an absolute total idiot and still get paid. So just optimizing for that math, right? And making sure that I'm finding those scenarios where I have asymmetric upside and I filter out the trades where I don't. That's what allows me to have a relatively steady equity curve. Honestly, Michael, just if you're struggling to understand the basics of a futures contract, just look it up on Investopedia or YouTube it. And I'm sure that there's 1,000 different videos or articles or things that can describe something in whatever way that you learn. The reason people don't understand it is because they have not chosen to go review those materials. There's stuff on my website about it. There's stuff on a million different websites about it. But I can't force people to do it. That's unfortunately their choice. What else we got here, team? Any other questions? At the moment, the chat's been really good. So no need to complicate things, but who knows at some point. Like we kind of have enough veterans in the group that when people step out of line, other people will say something without me having to, and that kind of accomplishes the objective. All right, team, I'm going to go final call for questions here. Final call for questions. Yeah, the yellow bar at the top. Yeah, I only exclusively trade my own personal capital and like family capital at the moment. Even when I was trading prop firms, I've always traded personal capital too. That's always been a bigger driver. The difference with the family fund that I trade, that not all of that money is mine, right? Some of that's for my dad's retirement, my sister's mortgage, my other sister's lifestyle, right, or helping her pay while she's doing her good things overseas. So I just don't withdraw cash from that in the same way that I could from prop firms. But I just think it's a little bit of a conflict of interest for me to own a prop firm and then trade using someone else's. But I've always traded personal capital after working institutionally. I mostly traded prop firms to show people what's possible and to basically vet things that I would recommend to people so that, I wasn't sending them to some scam firm. Like I wouldn't want to recommend a firm to someone if I hadn't gotten a payout from them before. And then now by owning my own prop firm, well, I can kind of put my money where my mouth is in a different way. Well, running not to get too personal here, but running the family fund has caused more problems than it has solved. So it's a huge fucking headache. I don't know if I particularly enjoy doing it, but at this point, I don't day trade that as much as I used to. It's more just a long-term investment portfolio that I don't have to touch. I just add positions to and trim stuff or do whatever. But yeah, it's led to a lot of problems. Like tax issues. People used to have access to it and they would just take money out and then complain why we were down or whatever. Yeah, huge fucking headache. It's a good question. What are my aspirations for day trader funding? I'm a very competitive person. And so I wouldn't have started it if I didn't think that I could become one of the bigger companies in the space. For sure, I've had that belief and that mindset. So, yes, that would always be an objective. The thing, though, that like I wouldn't necessarily view Top Step or My Funded Futures or FTMO to necessarily be a competitor because they're purely just a casino, right? What I'm trying to do is to basically run like a traditional prop firm, stuff that you would have found in New York or Chicago or London 10, 15, 20 years ago, except in an online kind of capacity. So think more like SMB Capital more than like a Top Step. The reason I say that, right, is because Top Step and all those other companies, they just want to take your money and they don't want to help you actually get better. So they kind of lie about being aligned incentives wise. They actually make more money when you lose. They don't want you to be profitable. They want you to be a losing trader. from my end, I want to get 1,000 traders trading live capital where I keep 20% of their profits. I'll make a lot more money that way. And it allows me to continue pursuing a passion of mine, which I've kind of found to be this side of like the streaming game, and allows me to not cheat people, I think, right? So those companies, they tell you that they want you to win, but secretly, right, they're trying to find ways to make you lose. Our incentives are a little bit different. And I think with time and with the right team and with the right marketing strategy, however you want to call it, people will see that difference and they'll want to be a part of this. And then naturally it'll grow and it'll become something really significant. So I don't want to be a top step. I want to be in my own little category. And I think that category is significantly better than what those scumbags offer. So I think that there is no ceiling for what we could accomplish here. But yeah, ask me what I really feel. Yeah, I think um yeah, like it's I mean the prop firm game is really good, right? Like fundamentally the idea of it is really good, but the vast majority of people aren't profitable traders, so they can't take advantage of the opportunities that it gives them. The one thing that I'm super proud of so far with day trader funding, and we're only a few months into this journey, is that our payout rate is 300% higher than what Top Step, FTMO, My Funded Futures, etc. advertise. So our traders are getting paid at a much higher rate. I would still like to see that number go up, but for now, it's a really, really good start. No, it doesn't, Christo. It's a one-time thing though, right? So it's like on your next payout that you request, you can double your request, right? And then if you refer another person, right, that's 2 payouts you can do it for. If you refer 3 people, that's 3 payouts you can do it for. So it's not one of those things that it goes in perpetuity. It's one double per user. That makes sense? Yeah, like I think with running the prop firm and having people profitable, we should all make money, right? Our incentives are all aligned. We're all on the same page. No one is incentivized to screw over the other person. And that fundamentally is a much more powerful model than what someone else has. Now, it's not sexy, but if I'm sure if I kept this up for 20 years, it would be pretty sexy. And so my unique selling point, right, with it is that we'll actually teach you how to become a better trader, and we won't bullshit you about how we do that. Other prop firms have stuff like, Top Step TV or whatever it is. But anytime you tune in and you watch that, they're always down thousands and thousands and thousands of dollars. They're not making money. So, they're blowing accounts because they make more money when you buy resets. And you see this with a ton of influencers in the space too, right? The people who are constantly shilling affiliate codes and things along those lines, they're literally just full porting every account and hoping everyone follows them and does the same thing, because then they just keep racking up those affiliate commissions. And that's like they're profiting off of you losing and pretending they aren't. And there's a special place in hell for those types of scumbags. That definitely struck a nerve with me. this weekend at some point here, guys, I'll I don't know, do some sort of like affiliate portal or something along those lines so that it's easier to track, what you have and who you've referred, and, create like, I don't know, customizable links and all this sort of stuff. But obviously, the more people you tell about us and what we're doing, the better. So I obviously appreciate any, positive word of mouth you might have about Day Trader Funding and DTR and myself. That goes a long way. All right, so I'm going to go one last time here. Final call for questions. My little doggo's giving me the eyes. He wants to go pee. Hey, that's amazing. And it's not the strategy, it's the risk management, right? Like risk management is the holy grail. It's the being a good loser that's a holy grail. My strategy is one way to trade, but that risk management concept's like that's what's going to keep you alive, right? So there's a million ways to make money. There's only like one or two ways to lose big money. So if we optimize for the simple thing, then the strategy makes you look smart when it's actually just the boring basics that are keeping you alive. So I'm not trying to discredit you or anything along those lines. I'm just trying to push you in the direction that risk management is the only thing that matters. Best loser wins. It's the most important thing. Hey, my pleasure, DC. Thanks for joining us, man. Just a reminder, guys, no stream tomorrow, no stream Monday, just because of the futures roll. So get some sleep, enjoy your lives, don't do anything stupid, right? It's not going to be, now that I'm not trading it, it's probably going to be a 1,500 point rally with not a single red candle in sight. But don't waste your time, energy and money on low probability markets. All right, everyone. So I appreciate you all taking the time here to spend DTR After Dark with me. I got through about 3/4 of one Negroni. So that's not too bad. And I will do another one on Tuesday and then be back at it again next week. So have yourselves a great day, team, and I'll see you then. Peace.